My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. Okay, hello. Welcome to Legacy Money, the show that helps you live more, give more, and leave more. We're joined today by my special guest, Chris Kirkpatrick from Life 180. He's the author of the book, CashFlow Hacking. And just a little behind the scenes, he's a former top 100 Texas Hold'em player. So, turned financial freedom strategist. I love that. Chris, welcome to the program.
Thanks, man. It's good to be here.
Yeah. So, man, you're all over online, and we're going to have a lot to talk about. I wanted to really share just real candidly some stuff that we run into all the time with the folks out there. But really, before we kind of get too deep in that, I know you're a dad, and this program is really all about family and sharing and giving. You were telling me just earlier, I wasn't sure, but you said you like to raise your kids internationally with intention. Tell us a little bit about that. Tell us about your family and a little bit. Where were you born and raised?
Well, I was born and raised in Vermont. And my wife and I were both born and raised in Vermont, moved to Arizona, moved for college in kind of like our 20s. We spent the 20s in Arizona, and then the Great Recession happened. We took it on the chin during that. We moved back to Vermont, decided we wanted to start a family, started having our kids back in Vermont. And, once you live in Arizona for a decade, it's really hard to move back to Vermont and deal with the winters. So probably like 6 winters in, I was tapping out. I couldn't do it anymore. And so we ended up moving our whole family. At that point in time, there were my wife and I, and we had our 2 kids. Our first daughter was born in 2011. Our son was born in 2014. And then we finally had our second daughter, third kid in 2018. And we relocated to Arizona in 2016 and lived there up until when we moved to the Dominican Republic, which was January 1st of 24. And we acquired a little eco hotel and retreat center down on the North Shore near the ocean in like this quiet little fishing village. It's super cool. Totally different lifestyle, totally different world, but it was really important to us, we want to live intentionally, and we want to take big swings and do big things and not, we'd rather have our regret be something that we tried that didn't work versus not trying, And so we decided to make this move. We wanted to kind of get our kids out of the consumerism mindset and out of like a lot of the things that we weren't necessarily in alignment with in the public schools. And so we got to make some shifts, and we did it, and it's been amazing. And so now we're back and forth. Like I'm in Nashville, Tennessee, like we were talking about. And right now I'm here traveling, and my wife and I every summer kind of do a road trip, and the kids get to spend the summer with the grandparents up in Vermont where I grew up. And, we're just kind of going event to event right now, doing a road trip and having a fun summer and, doing work on the road and creating content on the road like this. I'm in the hotel room right now, and it is what it is, but just doing the best we can.
Well, God bless you, man. We have a similar family there with 2 girls and a boy.
Nice.
Mine are recently graduating college, and
a little ahead of them.
Yeah. Born, a little ahead of you, but we started late. My first one 35. Before he even came along. So kind of late bloomers. But look, we're just going to have a candid conversation. Thank you for joining us out there. And I'm going to be asking Chris some questions, maybe catch him off guard a little bit. But really the whole purpose of the program is just to help you learn and grow financially and in any way that we can help. But we do have our comments are being moderated by the lovely Maritza over here. So if you have any questions or comments as we go along, just put them in the chat, and we'll try to get to all of your questions towards the end. And I want to be completely transparent. We are both life insurance agents, and we're sales people. This is our profession, but we're not going to sell anything on this program today. This is a live stream, and it's completely educational. And I, for one, don't ever shy away from being a salesperson. I've been doing it all my life. I've never had a job. I've for 45 plus years been self-employed. So I know there's a lot of you out there that are parents, some are business owners, and regardless of your profession, we all have to do some selling, right? To the wife, to the to our customers, whoever it might be. So I don't shy away from that. But again, that's not what this is about. What this is about is just sharing education that you don't get in school, right? And we're not accountants, we're not attorneys, and nor do we offer tax or legal advice, right? So, all right, now that we got that out of the way,
all the disclaimers out of the way, there we go.
Exactly. So, I just have to mention, you might want to catch Chris's most recent live that he did with an attorney.
Yeah,
that was pretty brave. So.
Those are really fun because you could just let it rip. I could say anything. I'm like, if I'm wrong, this attorney's going to back me up. So it's good.
Yeah. And I know I read where you had a securities license at one time. It's funny how they call it security, right? I mean,
that's really funny. Yeah,
couldn't be further from the truth. And I too was highly recruited to get securities license. I never did, but I sat in on many meetings and been in boiler rooms, you name it. But let me just ask you, Chris, have you ever lost a large amount of money?
Me? Oh yeah.
Yeah.
Okay. Oh yeah.
Me too.
Several times.
Yeah, exactly. Okay, good. I ask my clients that, the ones that are really bold and, think they're making money with their investments and they've never lost money. But my first experience, I lost everything I had, in the market. Well, I'm kind of glad to hear that. It's not a good thing, but we learn from experience, right?
Hey, education isn't free. You learn. And I mean, if you repeat the same mistakes, I mean, you're not going to get through life without losses. I think if you get through life without losses, you're not taking enough risk, like at some point in time. But the key is you want to make sure that you structure your life in such a way that you can take those swings and afford to lose. So when you do have those losses, it doesn't derail your entire life.
Yeah, absolutely. Well, I guess we have to start, since I brought that up, with some of the misinformation out there, because I know that you make a lot of videos, and a lot of your videos are about what's really going on out there in the financial world, with the TikTokers and all of this stuff. And I'm not on TikTok, never have, but I do see the videos from time to time. And like I said, you just had the video with the IUL litigation attorney, but he mentioned something. He said they're selling complicated financial products and they're sophisticated salespeople. I think he was kind of relating to the multi-level marketing aspect of people that are getting into it. But like I said, I really didn't want to get into this, but can you just kind of give us a quick summary of the IUL and the misinformation that we're on? And I know it's hard to give a quick summary, but just
I can do it. So IUL, first of all, if this is something that anybody's interested in, just go to IULexposed.com. I wrote a whole book. It's 255 pages. It will tell you everything you need to know. So I just think anybody that is buying an IUL or thinking about buying or selling, I think you have a responsibility to read this book and get the information. It's your life on the line, your financial future potentially on the line, the way that people are handling it. But that said, Robert Reichert is the attorney that I interviewed with, and I did a whole video series with him yesterday as well. And we're doing a lot more content, going up and collaborating on a lot of stuff because the information is so important. And I'm not legally allowed to say a lot of the things that he can say, and so we're partnering up to like get this information out there. But the idea is, Index Universal Life is sold as a product that has upside potential and downside protection, and it's sold being told that you can't lose money due to market risk. Because if the market goes down, you can't lose. You're protected with a 0% floor. And they're not wrong. Like from a technical perspective, you can't lose money due to market risk, but there are other variables involved in the policy, other levers and other metrics inside of the policy that the insurance company can maneuver, can kind of pull, that have negative impacts on your ability to grow cash value, have access to that cash value, have the death benefit, like all the things that we would talk about for a permanent life insurance policy or cash value life insurance policy. That what Robert was saying is that IUL is a very complicated product sold as a very simplistic solution, and that's the biggest problem with it. Is that it's not that it's a bad product, it's that it's a misrepresented product, and it has its use cases, very few use cases, but it's got some. And the challenge is it's just not the use case that people are selling it for, which is using it for accumulation inside of the cash value of the policy and then using it for tax-free income and retirement. The problem is it doesn't work like that. And it's being sold by thousands of TikTok influencers. Like if you went to TikTok right now and just started swiping from video to video on the lives, you're going to come across, or if you went in and typed in IUL and went to the lives, you'll probably find 25 people going live right now trying to sell you an IUL. If you go through and watch your recordings, there's so many videos of IUL. Like Robert and I yesterday went and just pulled up all these IUL videos, and we went through 30 videos. We were like, all right, let's just go through 30 videos, see what happens. And every single one of them, we picked up a lie or a misrepresentation of what it was. Yet these people are selling to thousands of people a year and making millions of dollars misrepresenting this, and they're doing it off the backs of middle America that quite frankly can't afford to lose in this situation. And so we've been collaborating and trying to put some stuff together, just because, listen, when somebody loses $1 million in a life insurance policy, like with an IUL, that's bad. That's really bad. But typically somebody with $1 million in an IUL policy can like they've got other things going on, right? And it's not going to devastate their life. But the people that are putting their whole life savings, that have been convinced to put all their money into an IUL, and that's going to be the only tool that they ever need, the only financial vehicle they ever need. And then, 7 years down the road, they realize, oh my gosh, this is not what I thought. And they've dumped 140 grand into it, or 70 grand into it, or whatever the number is. It's devastating. And so what we're doing is we're trying to protect people like that.
Man, that's awesome. And I should just mention, I didn't really, you've got quite a bit of experience in the IUL space. So that's how you have this knowledge, right? You're not just some guy that's like arguing the point. And I can appreciate that for sure, because I get asked about it just about with every client. And you happen to live out there in a spot where it's pretty hotbed, in Arizona, Phoenix area, for real estate, right? And and so you mentioned him yesterday. I don't even want to give him the breath to speak his name, but he's joined forces with probably one of the largest online real estate gurus that there is. I was a part of his club, there for a while.
Oh God, I'll get him though, bro. I'll get him. Don't worry. Give me time. I'm gonna get him.
Well, in my space, we just hate, Nelson Nash was my mentor. And so infinite banking is the biggest part of my practice. And for years, you never really heard the word, right? But now it's commonplace. And these guys have hatched along and say they're doing infinite banking. And, I can tell you that, there's attorneys after them. And, I actually, I kind of stay away from attorneys for the most part, but, I have to deal with them in my space, estate planning space. I have a, tax attorney I work with, and actually a couple of clients. I remember probably 10 years ago now. And I would see them all the time, the UL policies, and we would call it blowing up. This is really before IUL took off, right?
Yeah,
And
yeah,
I
yeah,
remember
totally.
this attorney client come to me one day, and he says he brings this big stack of paperwork, and he says, "Yeah, this is a client of mine, and what can we do about this?" And it was a UL policy that was, the guy it was a doctor, and now he was in his late 60s, and this policy was just, his premiums jacked up,
Through the
and
roof.
it's basically going away. So it's just terrible, what people are doing. But I wanted to just share something here. This is Chris's book, CashFlow Hacking. So
Yep.
you might want to read that. And I have to ask you,
Yeah.
because the name there, I know you're a faithful guy, but just the hacking word to me, how'd you come up with that?
Honestly, I was at, so are you familiar with ClickFunnels?
Oh yeah. Mm-hmm.
Okay, so ClickFunnels they got a process called funnel hacking.
Yeah.
And
Okay.
funnel hacking is the process of like, hey, don't rewrite the wheel. Find people that are successful,
Yeah.
right? Don't recreate the wheel. Find people that are successful in doing things successful. And then, you don't copy them, but you hack them. You take what you can from them and you emulate what they're
Yeah.
doing
Right.
to the best of your ability without losing your originality, right? That's the idea of hacking in that word, right? Like we're not like talking about like hacking some database to steal information here.
Right.
So the cash flow hacking, the idea of that really got behind cash flow hacking is I realized that the entire world of traditional finance, in my mind, is broken. It's designed to keep people kind of batteries in the system of the matrix, if you will. And if you like visualize the scene with Neo waking up in the matrix, plugged into the battery, not even knowing what was going on. But I look at it like that because I do some simple math. Well, and it's like, we can go into it in detail, but the average person that's 30 years old right now making $100,000 for a household, they're going to need $400,000 at the current, like the average rate of inflation since 1971 by the time they hit retirement at 65, $400,000 a year just to maintain their standard of living. And I don't know very many people that when they're 65, they want to be living the same standard of living that they were living when they were 30, so that's a pretty dismal amount, or a dismal situation. And when you think about some of the financial principles and whatever that lead to, all right, what do I need to do to be successful? Well, the 4% rule says that I could take a 4% distribution of my retirement assets. Well, if that's the case, we're looking at needing $10 million in an account by the time I hit retirement to be able to pull $400,000 a year of income. And so I don't know a 30-year-old alive with a household income of 100,000 that believes with any chance that they're going to get to $10 million in retirement savings. This is just not going to happen, right? And so I just believe that the power of the subconscious mind is really, really powerful. And the reason our savings rates in this country are at all-time lows is because people may not be able to explain it or articulate it clearly, but their intuition and their subconscious goes, you know what, this system isn't working for me. So I'm just going to enjoy life while I can right now and not worry about it. And so and I'll deal with that problem later. And so I wrote the book Cash Flow Hacking because it's the idea of it is like, stop investing for accumulation in this buy and hold world where you're putting your money in these accounts that you don't have control of for the next 30, 35 years and hoping that it works out and hoping somebody else has the best interest in, and does the right thing for me. I think we have a responsibility to take control of the results in our life financially and become who we need to become and learn the things that we need to learn so we can be radically accountable, so we can grow into becoming the person that we need to become to get the results that we want. And then in that, I think that investing for cash flow is the way to go. And when we do that, we have metrics that we can measure more accurately. I mean, think about it. Like the idea of going to school, getting a job, putting money in a 401k, and thinking that that's going to be enough 35 years from now. Like, to me, that just says, well, look how much the world has changed in the last 30 years. What's it going to look like in the next 30 years? Nobody knows. So to think that's going to work and to have this time horizon that's so far out in the distance, it's really hard to get our subconscious in alignment and to, get our identity to align with doing what's best for us and sacrificing for the next 30 years for that objective. And so the idea of cash flow hacking is saying, hey, let's invest for cash flow. Let's do this Let's set small incremental metrics and benchmarks that we want to reach. And when you do this, I'm telling you guys, you can convert a 30 to 45 year retirement plan, depending on when you start, to a 10 to 15 year retirement plan. And you can get the same results, better results, simply by taking accountability and becoming who you need to become, and investing for cash flow through cash flow producing assets versus buy and hold accumulation assets.
No, I love it. I love it. And I know you advocate, using cash value for different things, which we'll get into here in a little bit. But
Sure.
I wanted to really just kind of circle back to family a little bit, because,
Okay.
this program, family values and alignment. And you mentioned the word clarity. I actually have a whole talk that I do on clarity. So I love that. But let me ask you, because that's obviously broken, right? I mean, families, people invest their life savings into stocks and companies that really are against their family values. So how do you think people get in this trap? I mean, is it just because it's so easy to get the
Well, not
401k?
Yeah, they're not clear. Like, yeah, I think they're too they're just too reactive. They're too follow the crowd. Too much. There's too much like sheep nature in our country right now. Unfortunately, like I created what I call the Life 180 Wealth Formula. It's clarity plus alignment equals the life you desire.
Nice.
So clarity plus alignment equals the life you desire. The challenge is the reason people aren't doing what they do or need to do to be successful is because they don't even have clarity with what they're trying to accomplish. And so we need to slow down to like figure out what is it that I actually want. And the reason people struggle with money is because you're not actively using your money in alignment with your values and your beliefs. So, and if you're not using money as a tool in alignment with your values and your beliefs to create a life that's meaningful to you, you will always self-sabotage 100% of the time at some point in time. So like the money part is cool. Like there's going to be financial tools that need to be implemented. There's going to be financial strategies and assets like whole life insurance and real estate and business and things like this. This is all really important stuff that will need to come into play. But the most important part has nothing to do with any of that. It has everything to do with your mind, your values, your beliefs, your clarity on what the life you want to create. What does a life that's meaningful to you look like? And then understanding how to leverage money as a tool to create that life, and when you do that, then you start looking at this, and I just tell people that's where the clarity plus alignment equals the life you desires. How do you do what I would call an alignment audit until you know what you're trying to even create, right? Like we got to get clarity about what is the, start with the end in mind, like Stephen Covey would always say, and get clarity about what we want to create. And then we can do an alignment audit and figure out, okay, what am I doing right now that's not in alignment with the life that I want to create? Because most people think they got to work harder, invest more, take more risk, do all these things. These are all lies that are perpetuated by the media, by Wall Street, by all these things. And the reality is that you don't need to do more. You just need to remove things that are not in alignment. And when that happens, then you create the opportunity for the floodgates to open and more flow in your life energetically and spiritually. And that's where the floodgates open. Now you become who you need to become. You understand what you're trying to create. You understand why you're doing it, what you want your life to be about. The fact that it's not just about that, it's about your legacy and your kids. And, you want to leave them not just an inheritance, but you want to embody some heritage into them and really teach and pour into leaving a plan that lives longer than you, right? So our impact is greater than, just who we are. And the thing I love about what we do is in helping people is that you can literally gamify the whole financial system and make sure that no matter what happens, you win, right? It's just like the Bible in that way. It's like, you win, right? Like we know we win, like that is what it is. And so why wouldn't you want to make your financial strategy the same thing, where it's like, whether you die young or live a long, happy, healthy life or whatever it is, that what you want to happen will happen when you want it to happen, whether you're here to see it or not. And that's, to me, if you can't say that that's 100% the case for whatever your financial strategy is, then you should probably do an alignment audit on what's going on.
No, I love it. And maybe you can elaborate a little bit on that audit. I know it's on your website. That's why I pulled it up there. But,
Cool.
you mentioned a few things. I mean, the Stephen Covey, I actually just recommended that book this morning to someone,
Cool. Nice.
The 7 Habits of Highly Effective People. So, yeah, if
Mhm.
you get a chance, that's a great book to read. Um, and then, I love your quote. You sent me from Calvin Coolidge about persistence. That's awesome too. So, but the alignment part, let's talk just a little bit about that. I mean, because
Yeah.
and good luck to you, my friend, because you got girls, and again, my girls are up there, college age and graduate now. They know everything, right? And
Yeah.
I know your girls probably have phones. And how old are your
They do
girls?
now. Well, my oldest is going to be 14, and my youngest one is going to be 7 in August.
Oh, God bless you, because that youngest one's got to keep up with big sister. You just wait.
He
And
does, and it's crazy. It's crazy.
so, that's been a struggle, a challenge for me, really, because they were raised right, they know right, but
Yeah.
we mentioned the TikTok and the misinformation, and we
Yeah.
don't have to get into Snapchat and all the other stuff that's out there for them to get distracted
Mm.
with. But yeah, I
Yeah.
mean, how can someone do an audit? I mean, I know they can go to your website. You just mentioned you got that on there, but can you just elaborate? Maybe some self audits, some things that they can
Yeah.
ask. Why should
No.
they look at their mutual funds? I just saw at lunch today. I
Yeah.
saw a thing. The number of ETFs. You know how the inflation curve goes up, right? They look just like that. It's like quadrupling.
Yeah.
It's like thousands of funds every year are
Yeah.
added. It was insane. So
Yeah. It's
how
crazy.
can somebody do an audit with their finances? Like, just to know what they're, and again, we're not giving financial advice, but if somebody wanted to look at their 401k or look at their
Well,
mutual fund to see what the companies that it's actually vested in, how should they go
I,
about that?
I would say you don't start with your money. You start with you, and you start with your beliefs. You start with the life you want to create. You start with getting really, really clear about the life and the outcome that you want to create. So I have this thing I call it the Life 180 belief loop, and it's like we all have beliefs, and the beliefs that we have lead to internal narratives, right? Our self-talk,
Yeah.
and those narratives lead to emotions, right? The feelings that we have, those emotions lead to behaviors that we have, right? That like we don't just think and act. We think, have feelings, and then act, and then the actions we take lead to the outcomes, and the outcomes are 100% of the time in alignment with our beliefs. And
Mm.
so, if you're investing in a 401k, I'm not a believer that there's any good or bad strategy. I'm not a believer there's any good or bad product, right?
Yeah.
So I believe that there's only alignment and misalignment,
Mm-hmm.
if from like you reaching your success or not. So when I say do an alignment audit, I'm saying figure out what are your beliefs, right? And get really, really clear on that. Go through all that. And so I've got a thing called the Aligned Wealth Worksheet that I have that if you want to send people, you can,
Yeah.
and get it, like you're welcome to use it. But it walks people through, and the biggest thing that I see holding people back is their own limiting beliefs,
Yeah.
right? And so the first step of the audit is really unwind those limiting beliefs and anchor in new beliefs, and really understand that, all right, when we identify these limiting beliefs and you start to do the work around unpacking them, rewiring them, then you start to do the audit from there about, all right, what are my actual beliefs? What is the actual life that I want to create? And then you can start to look at, all right, how am I on the path to actually create that? And what am I using? If money is just a tool to create a life that's meaningful to me, how am I leveraging this money as a tool to do that? Right.
Mm-hmm.
And that's what it comes down to. And so it's not a matter like for some people, 401ks are fine, right? Like if you're getting the match and you're doing your thing, like I'm not telling people it's good or bad. Like I don't believe in doing that. I think the worst advice in the world from people like Dave Ramsey and Susie Orman and people like that is they tell you you're too stupid to think for yourself and that you have to follow their plan and it's too complicated and whatever. Like you're not smart enough to take responsibility for your own life. I have what I call the 5 F's of life: faith, family, fitness, finance, and freedom. Right. And so, I go through that and it's like, we know that we have to take radical accountability for our faith. We have to pray. We have to meditate. We got like our pastor or whatever can pray for us. But if we're not doing it for ourselves, Our family. If I'm not showing up as a husband and the father that I need to be, I can't outsource my success as a husband or father. I can't outsource my success in my fitness and my health and my workouts and my diet. In all these things, there's no freedom. We all want to get the freedom. That's what retirement's all about, y'all. And so, like, that's what we want. But there is no freedom if you have a bad, disconnected relationship with your higher power. There is no freedom if you have disjointed relationships with your spouse and with your family and with your friends and your kids. There is no freedom if you have health crisis. So we all know that we have to take radical accountability for those areas. Somehow with the finance we've been taught that we're too dumb, it's too confusing, it's too complicated. You're not capable of being the person who can take radical accountability. And I just say that's BS. Like, we have the responsibility, just like you have the responsibility to be the best husband and father and wife and mother that you can. You have a responsibility to get this right.
No, love it. Preach, man. Preach. You're preaching to the choir. The 4 F's there, I use it, and literally, spiritually, mentally, and physically, I've been talking to people about these things for 40 years plus.
Yeah.
And read all the books back in the day. But I just have to ask you, do you know who W. Clement Stone is?
Yeah, I've heard of it. Yep.
All right, you might do your homework. There's a book for you to read. Go back a little bit. But he came out with this thing, PMA. Did you take that class in college?
I did not.
No? PMA 101?
No.
No, they don't teach it, right? Just like they don't teach you about money, really. I mean, I was a business major. I learned nothing really about how business operates, yet I've been self-employed, for 45 years.
Right.
So it's, it's just crazy. So that's what this is all about. And by the way, some of you might be watching us live. You might be catching this on the replay, but we appreciate you joining us. And you might want to check out Chris's YouTube channel as well, Life 180. Tons of videos on there about just what he's talking about. And I love it. So let's talk a little bit, though, just about the finances for a minute, because people want to know, really, how do you create that cash flow, right? And why is life insurance even important? Because you brought up a few of the radio entertainers, I call them, that literally hate on life insurance. But that W. Clement Stone, when you learn about him, you'll find that basically he was one of the, you've heard of Ben Feldman, I guess.
Mm-hmm. Yep.
Yeah. So some of the most successful life insurance agents that the world's ever known. Yep. And so he talked about that. And but life insurance, when I got into the profession 21 years ago, I thought of it as a noble profession. Right now, I had actually, my stepdad had bought a Primerica policy when I was in college. They highly recruited me because I was already selling the books and they wanted me, but I never went to work for them. But anyway, what do you think happened? Well, he never saved the difference, right? And when do you think his life insurance ran out?
Probably right before he died.
Right before he died. So my mother received nothing. And, so maybe that's why some people have they don't like to talk about life insurance, kind of like a will, or a trust. I'm sure you maybe talk to your clients about that. But, it's, why do you think people have, other than just, like I said, the bombardment in the media, why do you think people have such a bad impression about whole life insurance? And, and how can we...
There's a couple things. People don't understand it. And people fear, the old statement, a confused mind always says no. So that's happening. So people that are confused and don't understand it. But the other thing I'll say is this, is that whole life, as much as I love it, and I know you love it too, has earned its bad reputation. And it's not that the product earned it, it's that the agents earned the bad reputation. And so when you go back to the 80s, if you think about the curve that we've been on economically, in 1980, the federal funds rate was high, right? And I think at 1980, it hit its peak at 19.4% with the federal funds rate. It went up from 6% to 19.4% virtually overnight. So imagine we're at, what's the federal funds rate right now? Like 4.5%? Imagine Jerome Powell raising the federal funds rate tomorrow to 16% or something like that. It would crush the economy, right? And so when we look at that, that's what happened. Now, the trick is if you understand whole life and dividend rates and all these things, well, dividend rates chase the federal funds rate, basically 10-year treasuries, whatever. And so the Moody's bond index. And so, and just like all fixed assets, because that's kind of what it is, right? And so from, you could go back to 1985 and some of these companies had 12% dividends. And so when you look at a whole life policy and you look at an illustration, you look at the way that they're sold, well, the current assumptions on a whole life policy are sold based on two factors. One, that you are going to get paid a dividend, which, okay, that's good. We can lock that in stone if you're working with the right companies. They've paid dividends for 100 plus years, never missing a year through the Great Recession, Great Depression, all the world wars, everything. So that, okay, they're going to pay a dividend. We can bank on that. But then the other variable that they don't talk about is that it's assuming it's at the current dividend at that moment. So back in 1985, it's 12%, 12.5%. And so from there on out, it went down and down and down and down and down. And so therefore people were just seeing like, hey, I bought this product that I thought was going to do this thing and get me these great returns. And it just keeps performing worse and worse and worse and worse. And the problem is you have whole life agents back then that are doing exactly what IUL agents are doing today. They're selling based on the illustration. They're not selling based on process and function and understanding what problems this asset solves for you. And that's where ultimately, to kind of bring it all the way around, that's where whole life insurance is the best fit for you. It's a savings alternative. It's not an investment alternative. So the old idea of buy term and invest the difference, it should be buy term and save the difference. I'm a huge advocate for term insurance, right? I think that very few people, when they're first starting their journey, have enough cash flow, free and clear cash flow, to buy the amount of insurance that they should have for their family. So my mindset is like, get term insurance, maximize your coverage, figure out how much the insurance company will give you, take it, and then figure out, all right, once I've paid for that, how much extra free and clear cash flow do I have? And then you start saying, well, what do I need to do? Do I need to get to 6 months of savings, emergency fund? Do I need a year? Do I want to build an opportunity fund? What do I want my life to be about? This comes back to the beliefs thing, right? Do I want to be a real estate investor? Do I want to start a business? Do I want to do private money lending? Do I want to trade crypto? Do I want, like, whatever it is? Once again, I'm not about telling anybody what they should or shouldn't do or what's right and wrong. It's, are you willing to become the person you need to become to step into that? To become that. And money is just a tool. And so where life insurance is really powerful is there's no other asset in the world that will give you bond-like returns, muni bond-like tax treatment, and money market-like liquidity. It's the only one in the world. And so when you look at it like that, that's the power of it. And I just believe that we need to save first, but save with the intention of investing, and when we invest for cash flow. And so if the idea is save first, well, I'm going to save in a whole life policy.
No, absolutely. I love it. I love it. Well, you're kind of hitting on a couple key points. I love that you brought up the Fed there, because like you kind of rail on IUL, I rail on the Fed all the time. I grew up in the 80s, right? So I graduated high school in 82. My first vehicle, what my first loan rate was on my first car?
Oh my God. Let me go 18%.
I still have the paperwork, 34%, because I wasn't a prime lender.
Oh my God.
Yeah, that 30, can you believe it? And people gripe about 6 or 8% nowadays, right? So yeah, it's all relative. It's all relative though, right?
Yeah.
And people just, they don't quite understand, I think, scarcity and free markets. And so that's really what gets people kind of caught up in rates so much. They just, they hear all the stuff in the news about rates this and rates that. And, it's all relative. So, why rates might be lower during this time on dividends, they're, also the borrowing rate is lower. And so all of those things kind of go together. So it's all relative. Yeah, so let's talk a little bit about that, though. Let's take it a step further. Let's talk, because yeah, absolutely. I believe in term insurance too. Don't hear me wrong. I like to get it with a mutual company so you can convert it later, right? And a lot of my clients started young, but a lot of my clients are getting older now. I've got them. They're out there. They're retired, and all these things are kind of coming to fruition for them. And so some of them convert, some of them don't. I started out, that's what I started out with $1 million term policy. And then I
Yeah,
just slowly converted a little bit over time.
totally.
So now, probably like you, I own lots of policies. But speaking of financing and whole life insurance, there's cost, and that's something that I always talk to people about, is that we finance everything that we buy, right?
Mhm.
And there's a cost involved. So if you've got money, there might be some lost opportunity cost if you spend that money on an expense, right? So we want to
Mhm.
spend that money on assets that either cash flow or go up in value, right? So can
Yeah.
you elaborate a little bit on that and how you teach people to use their life insurance?
Yeah, I mean that's kind of what cash flow hacking is all about. Like I teach people, you want to save money inside of a policy. Like when we think about, all right, I want to save money in first thing people think about is I need an emergency fund, right? So Dave Ramsey would tell you you need 6 months in an emergency fund. Well, I always ask why to everything. Like, and I would encourage everybody to just be like, all right, I'm going to think about why I want to do it. It's like, why do I need that amount of money? Why do I need 6 months? I would tell you that you need 2 years. A lot of people think I'm crazy for that. And so I don't force that on people, but I say 2 years because I think you need to have a year for emergency and you need to have a year for opportunity, because when the
Mm,
market goes through these cycles, you want to make sure that you're not coming from a scarcity place, scarcity mindset, scarcity spirit and heart. You want to have a mindset and a heart of abundance and looking for opportunity in every economic environment that we have. And what we know is during the hardest markets is when the most millionaires are made. So why wouldn't you want to position yourself to become one of them? That's my mindset. And so with that said, though, it's like, all right, like we think about like safe money. Well, what are your options on where you can save safe, liquid, accessible, guaranteed cash? Well, really, for most people, it's like a money market account, a high yield savings account, or savings account, and that's it. And most people aren't even doing that, right? And so the challenge with those accounts is typically long term. You have to it's a give and a take. You either have to get better returns, which are not great. They're comparable to what you get in a whole life policy, and you give up the liquidity of that money in like a CD or something like that. And there's penalties to access it earlier, if something happens. And then the other thing is you go to a high yield savings account, which historically speaking, even though we've had a little good run of it over the past couple of years, when we look at high yield savings accounts out over a 30-year period, which is really what we're trying to look at, they lose money to inflation. And so we want to make sure that the money that we save is safe, it's guaranteed, it's liquid, we have access to it, and it's a real and it's going to beat inflation. But on top of that, to me, if I want to have an emergency fund, I look at this, and this is my biggest problem with like keeping my quote unquote emergency fund inside of a savings account is like, what's an emergency? Like, to me, if you think losing your job is an emergency and you need 6 months of income in case you lose your job, you need to think bigger, because like that's not really an emergency in my mind. Like, you may need cash flow, don't get me wrong, but that's not an emergency. You can go drive for Uber to mind the gap. You can do a lot of different things at this day and age. We live in this economy where you could freelance pretty much anything and make it work. And so that's not an emergency. What's an emergency is getting diagnosed with cancer. What's
mm,
an emergency is getting a critical illness. What's an emergency is something like that that's going to debilitate you, take away your ability to live. And I got news for you. At that point in time, having 6 months of income in a savings account is not going to do anything for you. Having a whole life policy that has living benefits on it, that you can accelerate the death benefit, and utilize it for alternative medical treatment, or utilize it for quality care, or utilize it for whatever to pay your bills, to pay your mortgage, to help with that stuff in life. That to me is real planning, And so to be able to, we always say like the key is being more financially efficient. And when you think about efficiency is simply getting each dollar to go further, right? Getting more value out of each dollar that you're saving. And so I could save my money in a savings account and not get hardly any of the things I just mentioned, or I could save it in a whole life policy, and I could get the living benefits, the life insurance, I could get growth that over the long haul is going to outperform my bank account. And I don't have to give up any of the liquidity at the same time for that. And so, and I get tax benefits because everything you earn in your savings account is taxed, you know, on an annual basis, where whole life isn't. And so, like, when you look at that, it just becomes the biggest no-brainer in the world. And once again, it's not an investment, it's a savings alternative. But this comes down to, what do you believe? I'm not in the game of trying to convince anybody or sell anybody anything. The way I look at my job is to guide people to alignment. That's it. I want to help expose you to information to get you think differently, because I truly believe that if you knew what I knew, you would think what I think, and then you would shift all the different ways that you behave with your money. And so my job isn't to sell anybody anything, it's to expose people to new ways of thinking, and that thinking will change your beliefs, right? Because then we come to the belief loop, right? Like, we start thinking about, like, what are the thoughts I have? We could go backwards, right? Like, what are the thoughts that I'm having? Like, what are the internal narratives that I have around that? And then ultimately, what are the beliefs that I need to rewire at that point in time? And so when we go from there, yeah, that's what I look at, is just whole life insurance is the foundational asset. And we need to save before we invest. We need to save with the intention of investing. And the beautiful part about this, when you save like this and you save in a whole life policy, it does all those things for you, but it forces you to go a little slower. I think the problem in this country, in this world, is we have this microwave mindset mentality where it's social media, swipe left, swipe right, swipe up, swipe down, like, do all these things, get what you want and get it now. It's like, there's so much value in just slowing down and learning to grow into who you need to become, and not needing, to get the results immediately. I've talked to too many people that did really well for an 8-year, 9-year, 10-year period of time, and then they have one bad situation, and because they maybe were investing and they felt really comfortable, but one thing goes wrong in life, and boom, a decade of effort is gone, right? And that's a problem. And that's the problem. So you need, first thing first, you need to build your financial bunker. You need to build a financial fortress. You need to build the financial foundation that you can build the rest of your life on. And if it's built on sand, well, then it's going to be bad when a storm comes through.
Yeah, no, absolutely. Well, I'm glad you brought that up, because, where I live down here on the Mississippi Gulf Coast,
Yeah. You guys know a little something about that, huh?
Yeah. I mean, literally, whenever, and so we're going to get to real estate here in a minute, but,
Yeah.
I see a lot of these policies, people come to me, and, there's so much gibberish out there about policy construction and the right way to do this and the right way to do that. One thing that I rarely see when people come to me, with these 80-20 or 90-10 type policies, which I think are ridiculous, because, we call them bastardizing the policies. But, back to that a little bit, waiver of premium is near and dear to my heart, on a policy, because, and disability insurance. I don't know if you sell disability insurance.
We do a lot of disability. Yeah.
Yeah. My dad was disabled when I was a kid. He was in a car wreck. Yeah. My sister now is in a nursing home. She got electrocuted. So it happened. Yeah. And most people never even take that in. So when you talk about real emergencies, right? That's a real emergency. And 6 months, it ain't going to go very far when mom has to go back to work or whatever, or dad, whoever, something happens.
Totally. Just look at the stats. I mean, you're 70% more likely to get disabled before you retire than you are die. And everybody's talking about life insurance, and very few people talk about disability.
Right. Yeah. I've got a client right down the road here right now. It's a doctor, making hundreds of thousands of dollars a year, and he's on disability claim right now. So if he wouldn't have had that waiver, he wouldn't have the disability policy, they would, they'd be up the creek. And he even says that. He wrote me a nice testimonial, said, I'll say this is ours. So it's something else. And the foundation, again, that's where I'll start. You got to have that foundation, especially with the real estate people. I ask them, what's the first thing you build when you do when you're building a house, right? You got to lay the foundation, right? So so you got to have that protection. You got to have the savings. Bless you. And
thank you.
So it's something else. But let's talk about the growth a little bit. Let's say somebody, they start a policy and they want to add that to their plan, because, you talked about earlier, this dream of, going from 100,000 to 10 million to, live the same lifestyle in 20, 30 years.
Yeah.
It's hard for some people to get their arms around that's really what's going to happen. And, they don't even consider inflation most of the time. So, what could somebody, there might be some single parents watching this. There might be some business owners. There might be some real estate investors. But
Yeah.
give us an example of how somebody might be able to use a policy and what they could do with it. Because so many people think they
Oh my
want to
God.
get into real estate now. Again, when Hurricane Katrina hit, I'd been in business 1 year, Chris.
Yeah.
1 year. So you can
Huh.
imagine talking to people about financial state. We also had 12 rental properties at the time. So
Oh wow.
the rental properties are gone. What do you do now? You still got mortgages to pay, right? The bank, you think the banks forgave
Bank
those
doesn't
loans?
care.
They don't care,
Yeah.
But I know real estate's kind of the big thing now with people. And again, we've been doing it since the Carlton Sheets days and Robert
Nice.
Kiyosaki and the whole
Yeah.
family
Yeah.
into it. But maybe elaborate on how people could use their policy.
Yeah, I mean, like what I teach is save the amount of money. Like if you can find a property that's cash flow positive, I think that's key. You want to make sure you find properties that are in areas that are very landlord friendly, i.e., not places like California, New York, Connecticut. Like you want to make sure you're buying properties where if you have bad tenants, if they're not paying rent, like you can get them out of there quickly because I don't care how well the property cash flows. You can find properties in inner city Detroit right now that'll cash flow 25% per year, but the landlord rights there are horrible, and so you'll get stuck. Somebody just decides to not pay and squat. Now all of a sudden you got a tenant there for a year before you get them out, and you're stuck, right? So you got to take that stuff into consideration. But when it comes to the policy or any real estate, you're going to have to save for a down payment, right? And typically, if you want to do like a DSCR loan, which is where as long as you have a 680 credit score or higher, typically, and we've got some lenders we work with on that, and all the way up if you have 720 or better, it's even better. But you can utilize, even if you're self-employed, even if you're an entrepreneur, even if you don't have a lot of income, you can utilize the rent from the property as income to help qualify for the mortgage, right? So it really opens up your ability to do a lot. And so what you need to do though is save 25% down to get the best rates, right? So you can do it with 20% down. If you do it with 20% down, your rates are going to be a little higher. Typically, 30% down will get them a little lower. But and so when we talk about that, it's like, all right, where am I going to save this 25%? Right? Well, I save it in a properly structured whole life policy that will, and when I say properly structured, I'm not saying I agree with you. I think all this talk about all the different blends and so on and so forth is just kind of like crazy, right? Like it's nuts. But what is important is, once again, it goes back to your beliefs and your goals and objectives. And if I'm meeting with somebody and they say, hey, Chris, I want to have enough cash in a policy to buy a house, a rental property, my first property in 5 years, 4 years, 6 years, whatever the number is, it's fine. But you can't draw blood from a rock, right? So depending on their cash flow, we look at that and we say, all right, how can we design this policy to be for that, right? And then once again, we're never negating or ignoring the need for insurance, and we'll always supplement with term insurance. We'll always do it, like you said, I love it. Supplement it with a convertible term policy with a participating mutual company only. Because you never know, and you always want that convertibility option. I've seen too many bad things happen in this business and with people. And I'll tell you what, if you're out there and you're selling, you can have 1,000 clients, and I'll tell you what, it might not matter to 980 of your clients, but for the 20 that it does matter, you are going to be the godsend to them. You know what I mean? And it's everything. So that said, though, what we do, and this is what my book CashFlow Hacking is about, is utilize the cash value in the policy as the down payment for the property. So utilizing that. So basically what are you doing? You're utilizing the policy. You're taking a loan against, you're collateralizing it, right? Against the policy. The insurance company gives you a loan. They charge you an interest rate. You pay that back. As you do, you recapitalize your policy. And so what happens is, when you do this, it's a second mortgage on the property, right? Like you use a DSCR. you finance it with the down payment from your policy loan. That's effectively a second mortgage, and you make sure that the cash flow from the property is high enough to pay back your policy loan in a way that pays it back so you could recapitalize, and it pays the mortgage, and then you and any additional cash flow that you have, I just pop back to the paying down the mortgage or paying down the policy loan. And as you do that, what happens is you got the tenant paying down your mortgage, you got the tenant paying back your policy loan, you've got the appreciation of the property, right? You've got the increase of inflation, because if you do this the right way, you always have a 3 to 5% rental price increase every year. So every year your cash flow is going to get better and better. And then you have the depreciation of the property, which gives you tax benefits. So there's no other asset in the world that's going to do this for you. And so by utilizing whole life insurance, the great part about it is that you never interrupt the growth of your own money. And that's the power. Now, if you're just doing that with one house, not that big a deal. But when you start talking about investing for cash flow and trying to do a system and, repeating this process over a period of time, we're talking about hundreds of thousands, if not millions of dollars extra money that will be in your financial ecosystem by the time you retire. And so then what you look at is it's like, all right, what can you do with that? What does that look like? If you could build this whole system up and then it's all paid back, now you have all these rental properties and you can live off that. You can live off that cash flow. Now all of a sudden, everything you got in your whole life policy, that's your legacy, and that gets to go to the next generation. All that, and you can put it in a trust and design. That's a whole different conversation.
Absolutely. But you hit on a few key points that I just have to touch on. So it really, before you jump into real estate or you jump into life or anything, you've got to do some education, and education isn't TikTok videos, right? It's maybe read a book, meet someone that will mentor you in this, right? And get the education. But they also need to understand that it takes time, it takes commitment, and you have to capitalize these policies. So along with what we were talking about, the structure of the policy, I know I heard you talk about it in your recent video, but it takes time. Nelson Nash, author, Becoming Your Own Banker, my mentor, every example in his book was 5-year minimum capitalization period. Now I know you touched on it earlier. It's the I want it now generations that we're living in, and people don't, it's hard enough to get them to read a book, but you have to get that education. You have to commit to the plan. Again, align your values with what you want to do. And if it's real estate you want to do, then the policy can be used to fund that, or like you said, you can get a loan from a third party. But we like doing our own capitalization, our own policy, so that way you don't have to depend on the bank. Because again, like I said, the bank is not going to forgive the loan if something goes wrong. If your tenant doesn't pay the rent. And that's what scares me to death about some of these people, these agents out there selling these IULs or even whole life policies that teach getting a loan in the first year. Well, guess what? You go out and buy a property and then you don't have rent coming in. Again, I live here right after Hurricane Katrina. What happened? Well, then we had the oil spill, the Gulf oil spill. What happened after that? Well, then we had the collapse, 2008, 2009. So, if that happens to you, and now you can't make a property cash flow where I live because they're overpriced, right? So you can't do it unless you buy it, way below value.
Well, that's right. Most people make the mistake of buying in their backyard. That's the problem. It's like you got to find places that, like my wife and I are looking at another property right now in Kansas City, Missouri. I don't, why Kansas City, Missouri? Well, it just makes sense from a cash flow perspective. Like, I'm not going to buy real estate just because it's in my backyard. You know what I mean? Like it's got to be somewhere.
Yeah. Well,
and you got to have a good property management team.
Well, there you go. So the passive versus the active. I can remember the first time I went and spoke to my tax attorney, and I, been listening to Kiyosaki, and I'm like, "Oh, I got this passive income." He goes, "No, that's active income. You're involved with the business," because we did always try to buy in our backyard, right? Because convenient to go do the repairs, get the house ready, and ironically, when I talk to real estate investors, they always discount that. They never talk about the time and the effort that they put into doing that, fixing up the house, buying the foreclosure, starting the LLC, starting the trust, all these things that they got to do and pay for. And then it's kind of out of their control, even though it's still active. So, what you mentioned there, that's definitely, get the management company to do it, but that's a little, that's next level. So
on top of that, I can't fix anything. I'm like the only thing. My wife says I'm good with one tool, and it's the cell phone. That's the only tool I'm good with. Luckily, I'm really good with the cell phone.
Yeah, absolutely. So, well, we're going to wrap it up. We're at the hour time, so just kind of wrap it up. But if you just had to, maybe I want to bring up one more time. This is your YouTube channel. You've got lots of videos, and as people, you may realize as you're watching this, Chris works all over. Obviously, I'm in the South, so east of the Mississippi, Colorado, this way, I can help you. If you got anything out west, maybe there's somebody on here from Arizona or California or wherever. Definitely, Chris can take care of you. So here's his website, life180.com. Lots of videos on his YouTube channel. And
we just hit 1,600 videos on our YouTube channel.
Wow, that's incredible. Yeah. And here's his book. Don't you have a free version or a PDF? Can they get that?
I'll get you the PDF version. Anybody that wants it, they can get out to you, and I could share it with you, and you feel free to share it with them.
Yeah, so this video will have all the links in the description there. Cool. And Chris, I can't thank you enough so much. Thank you for coming on and sharing your wealth of knowledge, and keep doing what you're doing, man. I appreciate you. And everyone out there, if we can help you in any way, just let us know. You can go to my website, legacyinsuranceagency.com, and schedule a time if you want to meet with me. Or again, everything's in the show notes. And we appreciate you joining us today. Have a great day, and I'll talk to you soon.
Amazing.
Thanks, Chris.
You got it, man.